Hello my intelligent friends, welcome to this 8th lecture on the topic of admission of partner. Now we are going to solve the next question in this series of practical problems. Okay, so we have solved first lengthy question in which we have considered journal and ledger and balance sheet. Second lengthy question in which again we considered journal and ledger and balance sheet. And then we have solved the third question which was asking only revaluation account and journal entries, in which we have considered two different situations. One is as per the government textbook and one is an additional discussion for the purpose of understanding what is the implication of the word after admission of Nachiket. Now remember, this second option which I had discussed is not required to be written in examination. Okay, so this is what we have discussed, treatment as per government textbook and treatment not as per government textbook. Now today I am going to consider the next question, question number 4. Now interesting question it is, but again it's a small question because they have asked you to prepare only partner's capital account. Okay, let me now disappear from the screen so that you can concentrate on the question itself. Okay. Following is the balance sheet of Makarand and Mahesh sharing profits in the ratio of 3:2. This is a question from page number 140 from your government textbook. Page numbers may change over a period of time, but this is a very important question. Makarand and Mahesh, old partners. PSR is 3:2. Capital account, it seems that there is some misalignment. Capital account is a heading below which Makarand's capital account is 95,000. Mahesh capital account is 1 lakh. Just check here. This Makarand capital account is 95,000. Mahesh capital account is 1 lakh. Then sundry creditors are 4,000 and bills payable are rupees 3,000. So the total is 2,02,000. On the asset side, you are having building 72,000, plant and machinery 60,000, debtors inner column 42,000 less RDD 2,000, outer column 40,000, bank 20,000, furniture 10,000. So totaling is 2,02,000. On 1st April 2019, Mangesh is admitted for half share on the following terms. So old partners are Makarand and Mahesh and new partner is Mangesh. Old profit sharing ratio was 3:2. And Mangesh is admitted for half share. He paid rupees 1 lakh as his capital and rupees 40,000 as his share of goodwill by RTGS. Now what is RTGS? It's a system which is used for the purpose of making interbank transfer. It is also called as, or the full form of it is real-time gross settlement. So that is the new technique which is used by RBI for the purpose of transferring money from one person's account in one bank to that of another person's account in another bank. That is called as RTGS, real-time gross settlement. It's a point to be kept in mind for the purpose of understanding maybe OC or maybe any other subject, but it is not important for accounting. Even if he would have given by cash or by check, then also we would have considered that the entry is money is coming in and it is coming in for the purpose of goodwill. Only thing is that when the word is RTGS, that means we are sure that the money is not received in cash but it is received by way of bank. So the entry will not be cash or bank account debit, entry will be bank account debit because they have clearly used the word RTGS. RTGS means real time gross settlement. Next one, plant and machinery revalued at rupees 48,000. Building taken by Makarand at rupees 1 lakh. Okay, building is taken over by Makarand, be careful. Existing value of building is 72,000 and it is taken over by Makarand at rupees 1 lakh. Next, RDD to be increased up to rupees 4,000. Okay, existing RDD is there 2,000 and we are going to increase it up to rupees 4,000. Yesterday we had seen, or the earlier lecture we had seen, the treatment to be given in such a situation. Existing RDD is 2,000 and we want to raise the RDD up to rupees 4,000. So when it comes to passing the entry should not be of this 2,000, entry should not be of this 4,000, but entry should be of the amount which is the difference between old balance and new balance. Old balance is 2,000, new balance is 4,000, so the entry should be of rupees 2,000. Coincidentally, luckily, fortunately, the amount of entry and the amount of RDD as per balance sheet is exactly same. But please don't be under wrong impression that I have passed the entry of RDD by using the amount in the balance sheet. I have passed the entry of RDD not by using the amount in balance sheet, not by using the amount given in adjustment, but by considering the difference between these two amounts. Okay, by considering the difference between these two amounts. It's just a coincidence that the difference and the opening balance sheet RDD amount is same, but this amount is not important. Difference between this amount and this amount is important. Okay. Next one, old partners decided to retain half of the amount of goodwill in business. Very good. That old partners decided to sacrifice equally. Okay, this is a very important adjustment. It means we need not calculate sacrifice ratio. It is already given by them. Adjustment number 6, old partners decided to sacrifice equally. It is already specified that the sacrifice ratio of the old partners is equal, that is 1:1. Now remember, new partner share is given half, old ratio is given 3:2, and if this sixth adjustment would not have been there, then we would have assumed that the sacrifice ratio and the old ratio is same, that is 3:2. But because it is clearly given by the problem that old partners decided to sacrifice equally, we need not worry about calculating sacrifice ratio. We can straight away say sacrifice ratio given 1:1. 3:2 is not going to be sacrifice ratio because they have mentioned a different sacrifice ratio. It is agreed by the old partners and the new partners. And what are we supposed to prepare? Only partners capital account. Now be careful, in the partners capital account we'll have opening balance. Yes. On the liability side there is no general reserve, there is no reserve fund, there is no P&L account. On the asset side also there is no P&L account. So there is lesser attention, opening balance will be there. Then Mangesh will bring in capital. The entry for capital brought in by Mangesh will have to be considered. Mangesh will bring in goodwill. The entry for goodwill brought in by Mangesh will have to be considered. Then I think Makarand is taking over building. The entry for building taken over by Makarand will be considered. Then half of the goodwill is withdrawn. So Makarand and Mahesh capital account will be affected by the same. But one more entry is required. That is finding out the profit or loss on revaluation. And profit or loss on revaluation can be calculated by us only when we are preparing revaluation account. Only when we are preparing revaluation account. That means although the problem has not asked us to prepare revaluation account, we are forced to prepare a working note by way of revaluation account. So revaluation account is not asked by the problem, but unless we prepare it, we cannot find out profit or loss on revaluation. So we are compelled to prepare revaluation account as working note number 1. So there are only two things I am going to draw. Number 1, in the books of partnership firm, partners capital account, and then working note number 1, calculation of ratios. Working note number 2 will be revaluation account. Okay. So pause the video, draw the partners capital account, 6 to 8 lines. Calculation of ratio 6 to 8 lines. Oh sorry, not 6 to 8 lines. Here it is given already. So hardly 3 to 4 lines. And working note number 2, revaluation account, 6 to 8 lines. So 6 to 8 lines for partners capital account, 2 to 3 lines for working note number 1, and 6 to 8 lines for the purpose of revaluation account. Pause the video, draw the account, and then resume the video. Okay. So let me write down the names of the partner. What are the names of the partners here? Makarand, Mahesh, and Mangesh. Okay. Makarand, Mahesh, and Mangesh, and this is our particulars column. Since it is the main answer, you will have to give the column headings properly. Revaluation account is not a main answer, it's a part of working note, so you need not write the column headings like particulars amount, particulars amount. लिहिलं तरी चालेल, नाही लिहिलं तरी चालेल, मोठा फरक पडत नाही, पण मेन आन्सरला मात्र कॉलमला हेडिंग पाहिजेत. इफ इट इज अ मेन आन्सर, प्लीज प्रिपेअर कॉलम हेडिंग्स. ओके. सो पर्टिक्युलर्स मकरंद, महेश and Mangesh. Now first thing we are going to do is transferring the partners capital account to partners capital account as prepared by us from the balance sheet. So Makarand balance is 95,000 and Mahesh balance is 1 lakh. Let me go back to this account. I'll specify here by balance brought down. Makarand balance is 95,000 and Mahesh balance is 1 lakh. Okay. And Mangesh balance obviously 0. There are no general reserves and no P&L account, no reserve fund, so no difficulty. Next one, sundry creditors will go to directly balance sheet bills payable will directly go to balance sheet. Building, plant and machinery, debtors, less RDD, bank, furniture, all these different things will either go to balance sheet or they will go to bank account. We have neither prepared balance sheet nor we have prepared bank account, so we cannot show the same. Next point is now adjustments. Adjustments are telling us, see the first adjustment. On 1st April 2019, Mangesh is admitted for half share on the following terms. I think I have not written the observations. Okay, probably there is a chance that you may feel difficulties afterwards. So to avoid the difficulties, let me write down the observations. First observation, old PSR is equal to 3:2. Mangesh is admitted for half share. Sacrifice by old partners is given. So sacrifice ratio is equal to 1:1. Okay, next one, existing balance sheet already has RDD and there is THERE, there is adjustment of RDD. Next one, Mangesh is bringing his capital and his share of goodwill in by RTGS is equal to bank, and old partners are withdrawing, PRTNERS, old partners are withdrawing half of goodwill received from Mangesh. These are the things which we are required to keep in mind. And one more adjustment, Mangesh is taking over building. Mangesh nahi, Makran, sorry for that. And Makran is taking over building at agreed value. Okay, MAKARAND. Okay, so these are the observations. It is our practice in every problem we have followed that we write the observations first, so it becomes easy afterwards to understand what are the things which have led us to follow certain steps or to follow particular treatment. Look at the observations one more time. If required, pause the video and get the observations written in your notebook. I am repeating again, observations are not to be written in examination. Observations are only for you and me for the purpose of creating a map of what to do. So we have written partners capital account, in partners capital account credit side, and now we are looking at first adjustment. He paid rupees 1 lakh towards his capital and 40,000 as his share of goodwill by RTGS. So let us consider the entry for capital. बँकेमध्ये पैसे आलेले आहेत. Bank is the receiver and Mangesh is the giver. Entry will be bank account debit to Mangesh capital account. So bank account debit we have not shown, but Mangesh capital account we have shown. We'll consider here by bank account. Sir, how did you come to know that it is only bank and not cash? Because they had already specified that it is RTGS. RTGS means transfer is only by bank. So it is 1 lakh rupees in Mangesh column. What is the full form for RTGS? Real time gross settlement. Okay, if you want to learn more about RTGS, please Google the same. You will get to know the full form, real time gross settlement, and how the actual transaction happens when money is transferred from one bank account to another bank account by using the facility of RTGS. Okay, next one. And 40,000 as his share of goodwill. So goodwill is brought in by new partner in cash, that means it is premium method. In such a case we are required to consider sacrifice ratio. Sacrifice ratio is not required to be calculated, it is already given by the problem. So we'll specify old ratio is equal to given is equal to, what was the old ratio given by the problem? 3:2. sacrifice ratio is equal to given is equal to 1:1. Okay, and 40,000 is not the value of goodwill, but 40,000 is not the value of firm's goodwill, but 40,000 is the share of Mr. Mangesh in the total goodwill of the firm, because they have mentioned he paid rupees 1 lakh and rupees 40,000. So he has paid 40,000. That means it is his share. It is not the firm's goodwill. So 1:1 is the amount to be considered. There are two entries under premium method. First entry is cash is coming in or bank is the receiver and goodwill is being sold. So first entry will be bank account debit to goodwill account. I repeat, first entry is bank account debit to goodwill account. But we have neither prepared bank account nor we have prepared goodwill account. Since we have not prepared bank account, we have not prepared goodwill account, we cannot show the first entry, bank account debit to goodwill account. Okay. Then the second entry, the firm has sold goodwill, but where did the goodwill come from? It was generated by old partners. That means the goodwill which is brought in by the new partner should be transferred to the old partners. In which ratio? In sacrifice ratio. What is sacrifice ratio? It is given by the problem as 1:1. So we are going to consider goodwill of rupees 40,000 brought in by Mangesh in the books of firm by way of two entries. First entry is bank account debit to goodwill account, and second entry is goodwill account debit to Makarand capital to Mahesh capital in the ratio of 1:1. That means it will be 20,000 and 20,000. I hope everybody has understood the concept. Okay, let me go back. Yes. So here I am going to consider by goodwill account Makarand 20,000 and Mahesh 20,000. And Mangesh dash. Okay, 20, 20 and dash. So two entries, but only one posting we could show, because neither we have prepared the bank, we have neither prepared the bank account nor we have prepared the goodwill account. Since bank account as well as goodwill account is not prepared by us, we cannot show the effect in bank account and in goodwill account. But we could show the effect in partners capital account. It should be in sacrifice ratio, that is done by us 1:1. Next adjustment. Plant and machinery revalued at rupees 48,000. Adjustment number 2. Plant and machinery revalued at rupees 48,000. Look at the value of plant and machinery in the problem. The problem says plant and machinery value is rupees 60,000. Okay, plant and machinery value is rupees 60,000, which we want to bring it to 48,000. Please tell me, whatever is 60,000, if it is to be brought to rupees 48,000, that means we are not increasing the same, but we are decreasing the same. An asset value is going down. I am repeating again, an asset value is going down. It means it's a loss for us. Losses are required to be debited to P&L account, but this is the loss which is happening at the time of admission. So we will not be using P&L account, but we will be using the cousin brother of P&L account. The name of the cousin brother is revaluation account. So revaluation account debit, the amount will not be 60,000, amount will not be 48,000, amount is already 60, which we want to bring it to 48. That means the amount will be difference between 60 and 48. That means it is 12,000. So revaluation account debit side, we are going to say to plant and machinery 12,000. Okay, so let us consider revaluation account debit side to plant and machinery 12,000. Okay, second effect of this 12,000 will be in the closing balance sheet, which we have not prepared. Since we have not prepared closing balance sheet, we cannot show the second effect. Whatever is asked by the problem, only that much portion we are solving. If we would have prepared the closing balance sheet, then we would have written 60,000 in the inner column from the opening balance sheet. From the given balance sheet, we would have considered 60,000 in the inner column, and then we would have said less depreciation 12,000. So outer column we would have considered 48,000. That is how we would have shown it if balance sheet would have been asked by the problem. Now fortunately balance sheet is not us, so we are saved. We are just showing one effect, revaluation account debit. Second effect we are not showing. Okay, next one. Next adjustment is building is taken by Makaran at rupees 1 lakh. Let me show it to you again. Building is taken by Makaran at rupees 1 lakh. Building taken by Makaran at rupees 1 lakh. The value of building is 72,000. So in one single sentence, the problem has actually given us two adjustments. First adjustment says that building of rupees 72,000 is required to be revalued up to rupees 1 lakh. From 72,000 it will have to be made to be rupees 1 lakh. So it will have to be increased, appreciated. And after appreciation is done, then this building will be taken over by Makaran. That means it will be withdrawn by Makaran. So Makaran is the receiver and building is going out. So one single sentence, but there are two adjustments. First adjustment, building of rupees 72 appreciated up to rupees 1 lakh. 1 lakh रुपयाने ॲप्रिसिएशन केलेलं नाही आहे, ॲप्रिसिएशन करून 1 lakh रुपीज झालेले आहेत. Appreciation is not of rupees 1 lakh, but after appreciation the value should be 1 lakh. That is what we are interested in. That means appreciation should be difference between 72,000 and 1 lakh, that is 28,000. And once appreciation is done, then it will be taken over by Makaran. So Makaran is the receiver and building is going out. Makaran account debit to building account. So there are two entries. First entry, building appreciated. Second entry, building taken over by Makaran. Let me consider now building appreciated amount 28,000. So the entry will be building appreciated, that means it's an asset. Asset appreciated is a profit. Profit should be credited to P&L account, but this is a profit happening at the time of admission, so it should be transferred to a separate account, special account called as revaluation account. So in the revaluation account, we are going to consider on the credit side by building. And what is the amount? Amount is equal to 1 lakh minus 72,000 is equal to 28,000. Oh, I think I skipped one column. Okay, I hope now everybody is writing it properly. Very good. What is the second effect of this 28,000? Yes, think in your mind. 28,000 must be considered as an addition in the closing balance sheet. In the closing balance sheet, building we will write in the inner column 72,000. Then we'll say add appreciation 28,000. So the totaling will come as rupees 1 lakh in the closing balance sheet. Okay. Thereafter, this Mr. Makaran is taking over building because they have told that it is taken over by Makaran, that rupees 1 lakh. So Makaran is the receiver and building is going out. Entry will be to building account. Makaran is the receiver, debit the receiver, Makaran account debit. Building is going out, credit what goes out to building account. Where is the second effect of this 1 lakh? Second effect of this 1 lakh will be on the balance sheet asset side inner column. Second effect of 1 lakh will be on the balance sheet asset side inner column. Okay. So outer column building will become 0. In this problem, building is not having one adjustment, building is having two adjustments. 72,000 will be added by rupees 28,000, so it will become 1 lakh. And this 1 lakh will be again removed by rupees 1 lakh or reduced by rupees 1 lakh. So outer column is going to be 0 because building is now not in the hands of firm, but it has gone in the hands of Makaran. Okay. Next one. Next adjustment is RDD to be increased up to rupees 4,000. Let me show it to you. RDD to be increased up to rupees 4,000. So again same logic. Old RDD is rupees 2,000 and new RDD should be 4,000. So the difference in this RDD is going to be 2,000. We are going to pass the entry for 2,000. Whenever we are thinking of RDD, it is reserved for doubtful debts. That means we are talking about a loss. If it's a loss, it will have to be considered as P&L account debit. In this problem, we are not going to consider P&L account because we are talking about admission of a partner, so it will be transferred to revaluation account. Revaluation account debit to RDD account, that is the entry. So revaluation account debit side, revaluation account debit side to RDD account 2000. To RDD account 2000. Okay. Next, second effect, closing balance sheet asset side less from debtors 4,000. Next, the old partners decided to retain half the amount of goodwill in the business. See the way in which adjustment is designed. It is just to confuse you, but you are all very intelligent students. You should not get confused. What is the adjustment? The old partners decided to retain half of the amount of goodwill. Retain half of the amount. If you are retaining half of the amount, it implies that you are withdrawing remaining half. The glass is half full. It immediately means that the glass is half empty. अर्धी रक्कम ठेवणार आहेत याचाच अर्थ उरलेली अर्धी रक्कम घेऊन जाणार आहेत. Okay, since they have decided to retain only half of the amount, it implies that they have decided to withdraw half of the amount which is received in goodwill. So how much is the goodwill amount they have received? 20,000 and 20,000. Half of the same, that means they are going to consider 10,000, 10,000. So I'll specify here. Partners are the receiver and cash is going out. So to cash or bank account. In this problem there is no cash account. We are going to consider bank account. 20,000 into half, that goes to 10,000 for Makran, and same logic for Mangesh. Okay. Next one. Yes. Old partners decided to sacrifice equally. That is what we have already considered. So now what is to be done? I think all adjustments are over. So we can close revaluation account, find out profit or loss, and our rule says that revaluation account is prepared before the admission of the partner. That means the profit or loss on revaluation must be transferred to old partners capital account in their old profit sharing ratio, which is 3:2. So let us find out the profit or loss. Debit side is 12 plus 2 matlab 14, and credit side is 28. So the total of revaluation account is 28,000. Very good. And this total, we are going to find out the balancing figure. I think balancing figure is 12 plus 2 14, 14 plus 14 is 28. So this is 14,000. Okay. This 14,000 we are going to divide between two partners, Makran and Mahesh. Let me take only 3 letters of their name, so there will be sufficient space to write them. Okay, and then I'll write two partners capital. Let me split the cells into two parts, and yes, very good. And their old ratio was 3:2. That is given by the problem. So 3 and this is 2. Okay, so let us quickly consider this thing. 14,000 to be divided in 3:2. 3 pieces to be given to the first partner, that is Makran. 2 pieces to be given to Mahesh. That means totally 5 pieces. So we are going to consider 14,000 divided by 5 into 3. That goes to 8,400. And 14,000 divided by 5 into 2, that is equal to 5,600. And as we have already discussed many a times in the past also, amount column should always be right aligned. Okay, so the second effect, revaluation account debit to partners capital. So partners capital account credit side by revaluation account. The amount is how much? 8,400 and 5,600, and nothing to Mangesh because he is a new partner, and revaluation account is prepared before the admission of new partner. So new partner does not have any right to demand any profit or loss share out of revaluation, so that is required to be considered dash. So revaluation account is closed. We can close now partners capital account. The total of Mr. Makran is 95 plus 20, that goes to 1,15,000 plus 8,400, that means 1,23,400. Here also I am going to write 1,23,400. From that we are going to deduct 1,10,000. So the balance remaining is 13,400. Next point, 1 lakh plus 20 plus 5,600 is equal to 1,25,600, which I'm going to write here 1,25,600, and here it is 1 lakh, which I'll again write it here 1 lakh. Let us find out the balance. 1,25,600 minus 10,000 is equal to 1,15,600, and Mangesh is equal to 1 lakh. Okay. These are the three balancing figures, so I am putting them in an encirclement so that it will be easy for us to tell to the examiner that we have not copied it from anybody, but we have calculated it as a balancing figure. This was the only part of the question which was asked. What was the question? Prepare partners capital account. What have we done? We have completed partners capital account. Working note number, oh yes, there are two working notes. Working note number 1 is calculation of ratio and revaluation account. Why have we prepared revaluation account? Because unless you prepare revaluation account, you cannot find out profit or loss on revaluation. So to do that, we have prepared revaluation account. That's all. Problem is over. Thank you very much. In the next lecture, I'm going to consider one more problem. Okay. Bye bye.